So this is what it looks like in March 2026. Carney did the impossible, and he did it in record time. Money is pouring into Canada at levels we haven't seen since 2007. Foreign investors from Europe, Asia and Australia are lining up to fund projects, build infrastructure and secure access to Canada's resources. But south of the border, something very different is happening. The United States is sliding into a serious economic storm. Oil prices are surging. The stock market just wiped out $1 trillion in a single day. And a war in Iran, a war that never had to happen, is shaking the entire global economy. Today I'm breaking this story down for you into 4 parts. First, the capital rush, why global investors are suddenly piling into Canada. Second, the project behind the boom. Massive investments in LNG, ports, and critical minerals. Third, America's economic shock, the oil crisis, market crash, and policy paralysis unfolding in the US. And fourth, what it means for Canada, the opportunity and the risk if the US economy keeps sliding. Because right now the numbers are telling a fascinating story. Capital is leaving one place and floating into another. That's unreal, folks. Foreign investments into Canada just hit the highest level since 2007. That's an 18-year record. And here's the major kicker. For decades, American investors dominated foreign direct investment, or FDI, into Canada. But not anymore. Today, investments from Europe, Asia, Oceania and other regions combined is larger than the American share. Let that sink in. Plus, and this is important, FDI in Canada reached the highest level since 2007, while Canada's outward investment flow has cooled in 2025. This means we are taking in more money than we are spending. And what about Trump's pride and joy, the stock market? Okay, Canada's stock market was the top performer globally in 2025. Canada was number 1, and the US an embarrassing number 8. In other words, the world is diversifying into Canada. And the numbers are striking. In the last quarter alone, billions of dollars arrived from non-US sources. The United Kingdom became the largest foreign contributor outside America, pouring tens of billions into Canadian industries in 2025. Then there is Australia. During Prime Minister Mark Carney's recent visit to Australia, the country's largest pension management firm announced something remarkable. They're preparing to invest up to 10 billion into Canada. So why Canada? Because in a world of geopolitical chaos, investors are looking for something simple. Stability. Canada offers rule of law, predictable regulations, reliable energy supplies, and a reputation for honoring contracts. When global investors start looking for safer places to pile billions of dollars, they're looking now to Canada. Let's talk about where all that money is actually going, because this isn't just a financial speculation. Those are real physical projects across the country. On the West Coast, one of the largest energy developments in Canada's history is moving forward. LNG Canada Phase 2 is expected to attract about $32 billion in private investment. That single project alone could reshape Canada's energy export capability. Then you have major infrastructure upgrades. Ports are expanding in Montreal. The northern port of Churchill is being modernized to handle more cargo moving through the Arctic. And across the country, new facilities are being built to mine and process critical minerals. The raw material needed for electric vehicles, defense technology, and renewable energy systems. Saskatchewan recently secured reduced Chinese tariffs on agriculture exports and signed a uranium agreement with India. Quebec reached a mineral partnership with Germany, aimed at strengthening supply chains for batteries and clean technology. And remember something important here. Canada and Australia together produce a massive share of the world's lithium and uranium. Those materials are the backbone of energy transitions and advanced manufacturing. So when Canada builds those supply chains, it is not just exporting resources, it's positioning itself as a strategic supplier to the global economy. Now we turn south the border, because the economic picture in the United States looks very different. The immediate trigger is the war with Iran. Oil markets reacted instantly, tankers stopped moving through the Strait of Hormuz, insurance companies pulled coverage, shipping stalled. And suddenly oil prices surged towards triple digits. For Americans, that means gasoline prices climbing towards $5 a gallon. For businesses, it means higher transportation costs, higher manufacturing costs, and rising inflation everywhere. But that's only part of the story. The financial markets are also shaking. In just a matter of days, roughly $1 trillion in stock market value disappeared. Boof. Major indexes plunged, retirement accounts took a hit, and investors started asking a very uncomfortable question. Was the market already too fragile prior to Trump's Iran war? Well, most analysts answer this with a clear yes. For years, US markets have been overvalued, while corporate debt and government borrowing have continued to climb. When the war started, it didn't create the problem. It exposed it. Now the US Federal Reserve faces a classic economic trap. If they raise interest rates to fight inflation, they risk pushing the economy deeper into recession. But if they cut rates to support growth, inflation could spiral even higher. That's exactly the kind of situation economists call stagflation. We have seen anything like that since 1970s, the oil crisis. Except this time, many analysts say the shock is largely self-inflicted. So what does all this mean? Well, for Canada and Canadians, first the obvious, opportunity. When global capital loses confidence in one major economy, it looks for alternatives. Right now, Canada is one of those alternatives. Record investment inflow means new jobs, new infrastructure, and stronger export industries. It also means Canada has leverage in global supply chains, especially in energy and critical minerals. But here's a second reality Canadians need to understand. Our economy is unfortunately still deeply connected to the US. If the American economy slides into recession, Canadian exports will feel the impact. Factories will slow down, cross-border trade will weaken, markets get nervous. That is one of the reasons why Carney's administration works literally around the clock. Because one thing Canada can't afford, that is being unprepared. We need to have reliable partners, trustworthy partners, and diversify, and yes, diversify. So, could this be a strange position for Canada, attracting investment, while our still biggest trading partner struggles? No, absolutely not. The US is not a trustworthy partner anymore. And what do you do when you find out your political partner can't be trusted anymore? You make changes. You decouple. And you look elsewhere. But we have to hurry. Time is of the essence here. So, Canada's Conservatives, stop complaining and start supporting Carney's administration. That, right now, is the smartest move any Canadians can make. That effort will define Canada's economic future over the next few years. If policymakers handle it efficiently, Canada will strengthen its role as a reliable partner in a very unstable world. So let's step back here for a moment and take a look at the bigger picture. Money is flowing into Canada at the fastest pace in nearly 2 decades. At the same time, the US is facing a dangerous mix of war, oil shocks, market volatility, rising debt, and completely incompetent leadership. Two very different economic stories unfolding right next to each other. The big question now is whether this shift is temporary or the beginning of something much bigger. Is Canada becoming the new global hub for investment while confidence in the US starts to crack? Or will the US economy stabilize and the global system balances back? I want to hear your thoughts. Do you think this surge of foreign investments will transform Canada's economy over the next decade? Or do we Canadians have short-term memory? And is this just a short-term reaction to instability in the US? Let me know what you think in the comments below. And if you found this breakdown helpful, make sure you like this video, subscribe to the channel, and stay tuned. Because the economic story unfolding in North America right now is only getting started. Thanks for watching. I'm Wilfried Lemkula with Europe Curious. See you in the next one.